I bet you want me to talk about American Express. I can't. You've got my wallet and my cell phone over there. I don't even have an Amex card on me. Leave home without it. I don't even know what city we're in. American Express beat on earnings. $1.47 beat by 3 cents. That's not too bad. That's not great, you know, like 3 cents on $1.47. It's not blowing it out of the water. They did like what, 8.3 billion in revenues and beat their estimate by like, it was like 100 million. So like they were estimated to do like 8.2. The things that really get me in the report that I was looking at about American Express, especially considering you have it now and I don't want you to hold on to my credit card, is that the spending is up, and that is kind of spooky. Their operating expenses are down 4%, so good for American Express. They didn't beat on much considering they shaved that much off the operating expenses, which means that if you really go through the quarterly report, you're probably going to find that there probably was a few misses in a few different categories. But the thing is that everything, the net spending of their credit card holders was up 8% from last year. That tells me that there's a lot of credit out there. It's starting to get a lot easier to get houses in the United States. It seems like credit's flowing a little bit easier. I know the market's doing really good. I want this to be kind of a beacon to you to say that, hey, just take all of these signs that things are getting great, that things feel really good, and please relate them to 2000. Please relate them to the end of 2007, the beginning of 2008, and try to remember the same way that you felt, where everything was rolling and then the bottom fell out because a couple of things really weren't what they seemed to be. And I'm not saying that's what's happening. I'm just saying American Express is clearly lending a lot more money out than they were a year prior, and the markets are doing really well. People should be making more money. People shouldn't be spending more money on the hook. So while American Express beats EPS, $1.47, supposed to be $1.44, beat on revs, they only beat by 100 million at 8.3 billion. They beat by 100 million. The thing with American Express that really gets me is the operating expenses. Sure, they brought those back. It's a great company in and of itself. It's the bigger picture, and I'd like to see what Visa and MasterCard have to say when those statistics come out, if we're seeing that much increased spending on leverage. Because if people are putting that much money on the hook on a consistent basis, I think that's probably the thing that we should watch out for, because at what point in time does the economy turn and interest rates rise and some of those lenders call back some of those loans, and people are just way out on the hook too far. That's my only concern. Just do all your research. Just do all of your research and think about things, affect things intrinsically down the line and not just with that one company. Amex did fine. Think of the bigger picture.